Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before I get started, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. The technical indicators I use are not accurate 100% of the time. Fundamentals of a company and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. My goal is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. That said, today we're taking a look at Natural Resource Partners LP, ticker symbol NRP. This is a coal company with a market cap of $613 million. It is a small micro cap. And here we are on the annual chart. And I'll state this up front that I'm kind of going a little off the reservation here with this chart set up, which you'll see in a moment. But what we have is, it's coming off its 52-week high. It reached the bottom and has just pulled back to a confluence of the 250-day moving average where it bounced. And if we scroll down to the RSI, you'll see it's basically right in the middle of the range. These stochastics are also in the middle of the range, although they appear to be rising. The volume chart is kind of all over the place. It doesn't really give me an indication one way or the other based on volume. And the MACD just had a bullish cross and appears to still be rising, which is a good sign. But to come back here to the annual chart, you can possibly see on your screen, to put a line here, that not only do the moving averages meet there, but this level right here at about 48.5 has several touches over the course of the last year. Let's see, it's 1, 2, 3, 4, 5, 6. And this will be the 7th time that the share price has bounced here, either one way or the other, either as resistance or support. So that's a pretty strong area of resistance that it's running into right here. And as it rose to meet that point, it posted a red candle yesterday. So that kind of makes sense. But you'll also notice that the blue 200-day is definitely ascending. So the short-term trend may be down, looking at the yellow and orange 50 and 20-day moving averages, but the overall trend is up, looking at the 200-day. So what it looks to me like is, if the share price can bust through this particular level and get on the other side of the moving averages here and this level of resistance, there isn't really a clear area of resistance again until we get up here to about 55, which, if you take a look here, what happens at about $55 per share is this big old gap that has not filled. And that'd take it right up to $58 a share. So going from about $48 a share up to about $58 a share, well, that's quite a nice swing. So something to keep in mind, and that's why I pulled this company out today. And as I like to do, I'll switch over to take a brief, broad overview gander at the fundamentals of the company. You'll notice there's a very low short interest rate here. It's 0.38%. I'm a little surprised there's only 16% institutional ownership. This is a coal company. I would have thought that would be higher, but it is what it is. The debt to equity ratio shows it has average debt for the coal industry. The PE ratio is above average, so that's a little surprising. 3.57 PE is in the 65th percentile for the coal industry. So I suppose these coal companies can't really command large PE ratios. However, if we look over here at the operating margin, it beats out 100% of its peers, best in class. course, there's no gross margin to compare it to. So take that for what it's worth. We're looking down at the management effectiveness here. Return on equity is better than 3/4 of the other companies in the coal industry. And the growth rate is average. The dividend yield is outstanding here at over 6%. And the payout ratio is just over 29%. So that's a very high and a very secure dividend. Something I absolutely like to see if I were going to buy shares. So in any case, overall, I think this is a company to put on your watch list. And if it breaks above this level here, there's quite a few things holding it down. But if it manages to break above here, it could be a nice ride all the way up to 58. And that could be an easy 15 to 20% rise. So let me know what you think in the comments below. And if you got something out of the video, I'd appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy these brief overviews of possible swing trades, then please do all the things that the YouTube algorithm likes. Like, subscribe, comment, ring that notification bell. Or if you really don't like what I said and you want to tell me what I got wrong, you can leave those comments below also. Or if you want me to take a look at a particular company, just mention it in the comment section and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.